A significant new banking regulation has officially been approved and will go into effect this week. Here's what's troubling me about it. For countless Americans, retirees, small business owners, freelancers, everyday working people, this new rule could impact how you access your accounts, what kind of fees you might be charged, and whether your transactions get flagged or even frozen unexpectedly. Most people won't find out about this until something actually goes wrong, until they're standing at an ATM that refuses to dispense cash, or trying to make a payment that gets rejected for reasons they can't understand. But you're hearing about it now, which means you have time to get ready, to safeguard your funds, and to make sure everything is in order before this rule takes effect nationwide. Before we go any further, if you want to stay informed about banking regulations and financial policies that could impact your money, especially your pension, retirement savings, or fixed income, hit that subscribe button and turn on notifications. Here at Senior Pension Guide, we regularly break down financial news like this, the kind that genuinely affects your accounts and your day-to-day life. Keeping up with these changes could save you hundreds or even thousands in penalties and restricted funds. All right, let's dive in. So, here's what's happening. This regulation comes from the Financial Crimes Enforcement Network, commonly referred to as FinCEN, which is part of the U.S. Treasury Department. They've just put the finishing touches on what's called the Customer Due Diligence Rule Update, also known as the Beneficial Ownership Information Rule. Let me break that down in plain language. Starting very soon, banks are now required to gather and verify far more detailed information about who owns and controls business accounts. And under certain circumstances, they're applying these stricter verification standards to personal accounts as well. The official justification is to combat money laundering, fraud, and terrorist financing. Those are legitimate concerns that do need to be addressed. But here's where it gets tricky. The way banks are implementing this rule is casting a much wider net than most people expect. And that net is snaring honest customers who haven't done anything wrong, but who now have to supply extra paperwork, navigate additional hurdles, and potentially face frozen accounts if something doesn't align with the bank's new requirements. Let me share the story of a man named Michael. He's 54 years old, owns a small landscaping company, and has banked with the same institution for 18 years. A couple of weeks ago, Michael went to deposit a check from one of his regular commercial clients for $6,000. It was the same kind of deposit he'd made countless times before. This time, however, the teller informed him the funds would need to be placed on hold for a compliance review. Michael asked what that meant. The teller couldn't really clarify, just mentioned something about new verification procedures. 3 days went by. Michael still couldn't access that money. He spent 45 minutes on hold before someone finally told him his account had been flagged under new federal requirements. They needed updated identification, proof of business ownership, and documentation showing where the deposit originated. Meanwhile, he had payroll coming up, equipment payments due, and no way to reach the money sitting in his own account. I'll circle back to Michael's situation shortly, because what happened next illustrates exactly why everyone with a bank account, whether you're retired, running a side business, or just managing household finances, needs to pay close attention to these changes. Here's some background on why this is happening. Over the past several years, regulators have faced mounting pressure to crack down on financial crimes following high-profile cases involving money laundering, cryptocurrency fraud, and shady business operations. So they responded by tightening the rules. The problem is that when you tighten verification requirements and expand monitoring systems, you also increase the likelihood of false positives, of legitimate transactions being incorrectly flagged, and of ordinary people getting caught up in compliance reviews that can freeze their money for days or even weeks. And here's what truly concerns consumer advocates about this rule. Once your account gets flagged, even if it turns out to be an error, even if you've done absolutely nothing wrong, that flag becomes part of your banking history. One flag might not cause significant problems, but multiple flags, even innocent ones, can lead to your account being labeled as high risk. And once that designation is applied, banks may decide to close your account, refuse to let you open new ones, or report you to shared databases that other financial institutions check before approving applications. Getting cleared from those systems can take months or even years. Now let's walk through the 5 specific changes being implemented and how they might affect you personally. The first change involves enhanced verification for account ownership and control. Banks must now verify the identity of anyone who owns 25% or more of a business account or who has significant control over how it's used. You might think this doesn't apply to you if you don't have a business account, but if you're a freelancer, part of an LLC, or even receiving regular payments through Venmo or PayPal, your bank may now request documentation. This includes copies of your ID, proof of address, and in some cases, written explanations of your income sources. If you don't provide this when asked, they can freeze your account while they sort it out. That means no withdrawals, no transfers, no access, possibly right when you need it most. This leads us to Sandra. She's 38, works as a graphic designer, and does freelance projects on the side. Last month, she received a letter from her bank requesting updated documents. She glanced at it, thought it looked like typical bank marketing, and set it aside. 2 weeks later, her account was restricted. It took 4 days to gather paperwork and wait for the compliance team to review it. During that time, her autopay rent bounced, her phone payment failed, and she ended up with over $200 in fees, all because she didn't realize that letter actually mattered. The second change involves stricter monitoring of your deposit patterns. If your account has been steady and predictable for years, then you suddenly deposit a large or unusual amount, proceeds from selling a car, a family gift, a bonus, that can trigger an automatic review. The deposit might be held for several days while the bank investigates. If you can provide proof quickly, the hold usually clears. But if you're traveling or caught off guard, that money could sit inaccessible for days. The third change places additional scrutiny on international transfers. Wire transfers that once cleared in a day or two may now take 3 to 5 business days or longer. If you regularly send money to family abroad or pay international contractors, prepare for more questions and possible delays. The fourth change hits your account balance directly through new fees. If your bank requests updated documentation and you miss the 30-day deadline, maybe the notice went to spam, or you simply didn't realize it was urgent, some banks are now charging monthly compliance fees between $25 and $75 until you respond. Miss 3 months of notices, and you could see over $200 quietly drained from your account before you even realize what's happening. The fifth change affects how quickly you can use new accounts or make large transactions. New account waiting periods of 3 to 7 business days are becoming common. And if you're an existing customer trying to wire a large sum, say for a car purchase or a home deposit, the bank may place a temporary hold while they verify it's legitimate. Now, back to Michael. After 5 days of back and forth, his account was finally unfrozen. But during that time, he missed payroll for his 3 employees. One worker had his rent bounce as a result. Michael ended up paying his crew in cash from his personal savings to cover them. Total damage, around $400 in fees and penalties, plus hours on hold and significant stress. His friend Dennis had a different experience entirely. When Dennis heard about these new rules, he called his bank, updated his information, submitted documentation proactively, and gave them a heads up about an incoming large payment. When that deposit hit, nothing. No flag, no freeze, no problem. Same bank, same rules, completely different outcome. The only difference was preparation. Here's what you should do right now. Log into your online banking and make sure your contact information is current. Address, phone, email. If you have business income flowing into a personal account, call your bank and ask what documentation they now require. Keep digital and physical copies of your ID, proof of address, and income records. Let your bank know before making any large or unusual deposits or withdrawals. Turn on account alerts. and consider keeping accounts at more than one institution so you're not completely locked out if one account gets frozen. One more important warning. Whenever new rules create confusion, scammers move in fast. Your bank will never call you out of the blue asking for your PIN, password, or full account number. They will never threaten to shut down your account unless you act immediately. They will never ask you to transfer funds to a safe or verification account. If any communication feels off, hang up and call the number on the back of your card directly. And if your account does get flagged, despite doing everything right, stay calm, ask clear questions, get names and reference numbers, send documentation as fast as possible, and escalate to a supervisor or the Consumer Financial Protection Bureau if needed. Many banks also have hardship provisions that can release partial funds while investigations are ongoing. The bottom line is straightforward but serious. This rule is real, it's in effect now, and it will affect how banks monitor your account and how quickly they can restrict your access to your own money. Update your contact information today, keep records, turn on alerts, and be ready to respond fast if your bank reaches out. Here at Senior Pension Guide, we cover the banking and pension updates that matter most to real people, not just the headlines, but the fine print that affects your daily finances. Subscribe so you don't miss future updates, and leave a comment below telling us if you've dealt with any account issues recently. If this helped you, share it with someone who needs to hear it. Thanks for watching.